To you as well for joining us and talking about some of these stocks which have moved big time today. We have our next guest joining us. Suveer Chainani is with us now. Suveer, good afternoon. Thanks much for joining us. I wanted your thoughts first on what are you doing with one of your top picks, Laurus Labs, after this move from 500 to 1200.
Right. Good afternoon, guys. So Laurus has been, partly everything has got an element of luck in it. So I was also very surprised by the way it moved. My original thesis was that about 3 months ago, it is one of the cheapest and good quality because, back in my days, I did the IPO of Laurus Labs. So good management, very cheap compared to peers. Let's go with it. But then when the results happen, and if you listen to the management, of course they had a strong beat, but the sense was that this was not an aberration, and the 16 rupees of EPS that they delivered in the first quarter can be annualized into the full year. So then things change, your view change. In my view, I think there is much more to go, because if you just annualize the $16 of EPS of first quarter, and we know that they're doing a lot of capex despite being free cash flow company, and so the years to come will have further growth. It's an API company. Even on a conservative basis, it is still available at below 20 times multiple, 18 times roughly, depending on whose estimates you use. But forget about the way the stock has moved. But if you look at it on a point in time and say that it's still very cheap, below 20x, and these very good management, very good balance sheet, very good cash flow generation, good capex, good space. So maintaining my faith there on Laurus.
Okay, maintaining your faith in Laurus. What a stellar performance has been, right? 150% in the last 3 months. A true wealth creator. But Suveer, hi, afternoon. Thanks for being with us on the show. I wanted to talk a little bit about TCNS clothing that you like. It's an apparel company and it has not generated wealth for investors at all. In fact, why have you chosen that stock at a time like this? I mean, as people work from home and, live most of their lives at home, they don't have the need for so many clothes anymore. So why did you choose this apparel company?
Right. So, of course, to approach the market, one can take two views. One is that, the current state remains as is. And therefore, what's the best portfolio to make in a work from home and a depressed GDP environment? The other side is that we know that this won't last forever. What we call as vaccine plays. So once things get back, then which ones will come back, and we know that it's a matter of time that people will be out, and definitely women, and you can watch for yourself, using branded clothes from a supplier like TCNS will come back. So it's a recovery, it's a vaccine play. But again, you got to be careful that you don't want to pick up those stocks which has management quality issues or balance sheet or cash flow issues. So again, based on my past life, did the IPO of TCNS brands or TCNS clothings, one of the best management out there, very good balance sheet. They have been doing the best that they can in this environment, which is manage the costs. And it's a matter of time that, things get back. And there's a reason why, the stock is available near its all-time low. It's a high quality company available at its all-time, near its all-time low. It started to move, but I think give it six months and it can also give you something like Laurus kind of returns, very strong returns, but you got to wait it out for 6 months.
Okay, that's TCNS clothing. Let's talk about some more, discussed stocks. City Union Bank, that's an interesting one. I've heard some bullish noises in the past as well, but what makes you, what convinces you that this time perhaps the story could in fact play out?
When I made my 10 stock portfolio, people I speak to, they often used to ask me, you've got no banks in it, so how come you don't have any banks? And my view on the banks has been for the last few months that it is so complicated that, it's hard to find a clear-cut view that, which bank will do well, basically trying to estimate what's going on their asset side. So there is two strategies: either stay totally away, or if one needs to have, then just go with the top quality. And by that I mean that the bank which has got lowest cost of funds. And if you got the lowest cost of funds and you work on normal NIMs, then you will not do very risky things. And that stock is Kotak Mahindra Bank. Of course, it is very expensive, but, it's got the lowest cost of fund. But, one also can have a look at, what is in the other extreme, which are the beaten down banks. Markets have been very kind to investors in the last few months. The question is that banks is still very, very depressed. All financials have massively underperformed. I'm also thinking when to start, shifting the portfolio from tech to banks. But for now, I'm still remaining overweight tech. But, one such bank, as you also heard, I know very little of City Union, but, we all live in an environment where we talk to people and take their views. So this is one stock where I took the views of others and believed that, this is a very good quality and it's really beaten down. So on one side, you've got, stocks like Hero MotoCorp, which have done very well, and Laurus. And on the other side, we are hope stocks or vaccine stocks like TCNS Brands and City Union Bank.
Okay. Of course, TCNS has very well-established brands like W. I mean, it's very popular as well. My only argument was that people may not find the need to wear as many clothes. But as you said, it could be a revenge buying theme that plays out. I wanted your thoughts on...
Just to correct you, Sonia,
Yeah.
For now, yes. But, think of it when everything, if this thing is totally gone, right? We know that death rates are very low, but once we know the world is back to normal, then people would buy clothes, correct?
Sure, of course. I mean, I'm not denying that at all. The similar is the case that's playing out for a stock like Hero MotoCorp, right? I mean, 6 months back, before COVID, actually, the entire sector was in doldrums. But now there's this whole personal mobility theme that's playing out.
Yes.
At this price, despite the run-up, despite it being at a 52-week high, you still like the stock?
Yeah, so it's again, one of the biases people have is looking back and see that what the stock has done both on the upside and on the downside. So forget that for a moment. Just evaluate the things as they look. And certain things don't change. So we know that, personal mobility, people will not directly go from buses and trains to cars, right? They might go for a entry-level Maruti, but the shift that's going to happen from a personal mobility perspective, which the trend can last, is going to be from buses and trains to two-wheelers. That's one, right? And the second theme of, more delivery happening. So, to home, all sorts of delivery services, then again, scooters do well. So this shift, which is going to happen towards scooters or two-wheelers in broadly, is good. And the best way to play that is Hero MotoCorp, because it's an India two-wheeler play. It has got scooters and bikes. And if you look at the return ratios, balance sheets, management quality, there is nothing to doubt. So valuations are still around 20x, so nothing very frothy. But yes, it has done well, but it can continue to do well. So I'm believing my faith. I know some of the other speakers talked about taking profit, but that could be from a weekly or a daily perspective. But, if you look at a 3 months, 6 months basis, I think Hero Motors still has got a long way to go.
Okay, Suveer, any other theme or stock before we let you go?
Yeah, I've been thinking of it, on macroeconomics and this whole thought of that, over years, we've been seeing that, India has got positive balance of payment for 8 of the last 10 years, but we have seen that rupee has also depreciated. So, questioning that action by the RBI really, because, why the RBI has been buying dollars to keep the rupee at a low level or depreciated, whereas, it could have had looked at appreciation of the rupee. And yes, in the very short term, one can argue that rupee appreciation would hurt the exporters. But what we need really from an Atmanirbhar Bharat is that the interest rates needs to come down. So one needs to do two things to keep the interest rates lower. Of course, India has got one of the highest interest rates, which is hurting corporate competitiveness, be it in exports or in consumption. So when rupee strengthens, which it should because you're running a positive BOP, then your imported inflation comes down, right? So the systemic inflation comes down, which is going to help give the more headroom for RBI to cut rates and therefore help the economy. And the second is the whole argument around negative real rates. Inflation is inching up, but we've seen in the past negative real rates is actually supportive of equities. So that's my thought. Keep the interest rates low, let rupee appreciate from a macroeconomic perspective.
All right, so we leave it there today. Thanks a lot for joining us. Now, before we take a break, I want my director to just show me the stock of Aarti Drugs. And, this is the the point that I was trying to make even yesterday as well. First, let's pull out today's chart of Aarti Drugs. It's down, I think, now 10%.
10% lower.
It's a, I don't know if this is the lower circuit on Aarti Drugs, if 10% is the circuit. Actually, it is. So it's on lower freeze now. Now pull out a 7-day chart and then we'll have a 1-month chart. I think this will explain what's happened here. So there it is, as you can see. Now it's still up about 27% over a 7-day period, and if you see a 1-month chart, it's still been a remarkable multi-bagger. But from 3,700 high, it's fallen to 2,940 in 2 days. That's 800 rupees gone in a matter of 2 days. 2-3 days, you may want to call it. So yes, momentum can do crazy things, but the point about the market perhaps taking you out at some point and timing your exit. So just look at that, 10% down today, and I think yesterday also it was down. So from 3,700 to 2,900 has been a swift decline. Of course, no problem if you bought in at 1,500 thereabout.
But you're still making big gains then.
But if you got in, after hearing all the good stories at 3,500, 3,600, there it is, 2 days, it's down about 15%.
That's actually the problem with most of retail, right? I mean, by the time they identify these stories, they've already run up quite a bit. So that's when they burn their fingers. So I guess exit is more important than the exit strategy is more important than the entry, I guess.
I think, and we'll discuss that today in our show. Immediately after closing bell, investment guide is coming up. So we'll talk to Basant about this. But you know what, Sonia, this time at least, and this time it has been slightly different. This time retail has made a lot of money in the market. And I dare say that, they have made actually more money by not putting it in mutual funds, but by direct investing. How much of this money they'll be able to take home in their bank accounts, that is always the key, because always the greed factor comes in when you get into a market like this. We'll take a break and we'll come back with the BTST calls from our technical experts. Also, a couple of important